Hello, thanks for joining us. I'm Nicole Lorg with eXp Realty, and my friend and lender, Jeff Quincy with Green Home Loans, is back with me today. So Jeff has kindly agreed to join me for our Q&A sessions once a month. So we'll be answering any questions that either of us receive for both buyers and the sellers. So I encourage you, any of you watching, if you have any questions for Jeff or myself, post them in the comment section below this video or send us direct messages with your questions. And first, we will get an answer to you as soon as possible, but also we'll be addressing the questions during one of our Q&A sessions recordings that we have. Because I'm sure if you have questions, many other buyers or sellers have the same questions as well. And to be respectful of everyone's time, we will keep these monthly Q&As to 5 questions. I'm sure some of these questions will require more in-depth answers. So if this video is longer, I will post these sessions into 2 parts during the same week. Jeff, we'll also have a little treat to offer home buyers at the end of this video, so stay with us. Jeff, thanks again for agreeing to do this with me. Do you have anything to add before we get started?
No, absolutely. Thanks for having me. Excited to do this. I think this is a great thing to provide with all the questions happening, right? A lot of uncertainty in the marketplace. So hopefully we can unpack these most common questions every week as we do this and help everybody, or however often you want to do it, right? The number of questions dictates how often we'll do this.
Yes, absolutely. All right, you ready to go?
Let's do it.
All right, so this first question that I got is a 2-part question I received last month, and it kind of puts me on blast a little bit. But it says, I am waiting for home prices to come down, and Nicole's videos keep telling us they aren't. What do you see on the lending side? And then the second part of that is, and where are rates going?
Perfect. So I'm going to answer that with a couple of different statistics. Okay. If you've ever heard me talk before, you know I always say that we answer with facts, not opinion, because we can all have an opinion. Nobody knows what to listen to. So in regards to home prices, very interesting statistic going back 70 years, looking at people who bought houses at the price point they did and what those house values were 10 years after ownership. And there's only one period of time during that entire span of 70 plus years, and that was somebody who bought in 2006 would have lost 3% in home value by 2016. So when we're looking at the 10-year spread, only one time during that. You could have bought any other time. Now that it fluctuates, some people only gained 3% during that 10 years. Some doubled their house prices in certain periods. Okay, so that's a statistical fact of what's happened historically. So if you're trying to time this market on a downturn, history shows good luck, right? The second thing is we also have to look at factually what happens in real estate, supply and demand wise. Okay, if we're waiting for rates to come down, which all the experts recommend or suggest that they're going to by the end of 2024, inventory and rates impact what happens to prices. So as those rates come down and inventory comes down because there's more buyers hitting the market, both those things come down. What happens? There's increased competition. When there's increased competition, you start hearing things, which Nicole, I'm sure you're hearing this in the marketplace as well. Multiple offers. Somebody in that group of multiple offers is going to offer that seller more than what the house is listed at. And you're going to hopefully not see craziness like we did during COVID, but you're going to start seeing $5,000, $10,000, maybe $15,000 over list price. And as soon as that transaction closes, what does it do? Creates the new comp for that, that comparable sale for that neighborhood. So now prices start going up. So if we're looking at facts, there's nothing that says house prices are coming down anytime soon here in Arizona. That's not going to be true across the entire country, but here in Arizona, supply and demand is on the seller side right now, and house prices are only going to continue to go up.
Yeah, and even this past fall, I had 2 listings that both have received multiple offers. Now, we didn't receive an incredibly over list price, but the terms were very favorable. I was able to get favorable terms for the seller and get slightly over that list price. So, I mean, right there, I mean, with the market already, with the rates already still high, and we're still getting those multiple offer situation, can you imagine what's going to happen when those rates come down even more?
Right. They haven't even started to come down yet. And we've had just two different clients in the last 2 weeks trying to get under contract. They just went under contract, but it took them 3 or 4 houses before they got their offer accepted. So it's not across the board, but it's certain pockets. There's certain price points where the competition's already starting. We're seeing it already.
Yes. And okay, so you already addressed the rates part. All right. So number two, are there any down payment assistance programs? Now, I've had buyers asking all year long, and I know I've addressed this with you earlier in the year. So what about now?
Yeah. So down payment assistance programs are available, and we do a lot of them inside of our branch. You'll find loan officers that talk negative about them. There's really just one negative point to it, and there's many different programs available. They usually have, well, they always have minimum credit score requirements. Most of them have some level of income limit that if you make over a certain amount of money, you now no longer qualify for that program. The only downside of that is, it's the age-old statement that in our country, nothing's free. So when you get that down payment assistance money, the trade-off is that you're going to have a higher interest rate. And right now, those programs are running anywhere from 1 to 1.5% higher in interest rate for the trade-off of the money. Now, that might be a good short-term solution to get you into a house today, get you off the sidelines and owning real estate so that you can gain that equity. But we want to make sure we're uncovering all options first before we resort to that, because that interest rate difference is going to generate a higher mortgage payment on the exact same house of somewhere between $250 and $350 a month. So you're absolutely paying for that quote unquote free down payment assistance or grant money.
Okay. And are those forgivable, or are those a second, like a separate payment on there?
Yeah, most of them now have a separate payment on the second. I don't get too concerned about that because you're looking at $50 to $60. It's a really small loan amount on it, so it's minimal. There are still some forgivable options, but we're slowly starting to see those forgivable options go away. You've probably heard things like, hey, if you're in this loan for 3 years, it's forgiven and you no longer owe anything. So if you refinance or sell the house prior to the 36-month mark, you owe something back. And that can prevent a refinance as well. So that's a downside of the down payment assistance loans right now, is just what percentage you're financing on day one is probably going to prevent you from being able to do a refinance in 6 to 12 months when those rates come down. And most lenders aren't telling clients that. Now, you'll hear me talk about down payment assistance programs more, and you'll hear me using that as a viable vehicle to purchase a home once rates are down. When we know that a future refinance isn't coming, then that will be a great option. So, but right now we don't want you to miss the boat on a refinance for that.
Right. That's what I was going to ask you, is like most, like for regular loans, if you're not asking for down payment, you just need 6 payments or your 6 months. And this is a possible, with DPA, you will not be able to do that in most cases then. At this
In
point.
most cases, it's going to prevent you. That second mortgage is what prevents that. Yep.
Okay. All righty. Number 3. This is one I love to talk about. I don't understand what a 2-1 buy down is. Sounds like an adjustable rate mortgage. Nicole says it's better than asking for a price reduction. So can you explain that? And also, I know you have a wonderful chart that breaks that down.
I'll talk a little bit and I'll share the chart because it's easier than just throwing numbers out. But Nicole, you're giving the correct advice. It's everything I tell everybody. First of all, it's not an adjustable rate mortgage. We're going to talk about 3 different interest rates, which always leads people to think that it's an ARM or an adjustable rate mortgage. In 20 years of doing mortgages, I don't believe there's a situation where an ARM makes sense. Definitely not in this market. So it is not an ARM. So let me share my screen. I'm just going to walk through this very quick, guys. This is going to be a 30,000-foot overview. We can go over this one-on-one with each individual client that wants to address this further. So here is a chart coming up that I created 2 years ago when we knew the 2-1 buy downs were coming. Nicole, can you just confirm you can see?
Yep, I can see that.
My chart? Okay. Yes. So we're just going to assume a $400,000 purchase price at a 7.125 interest rate with 5% down. Here's what your principal and interest payment would look like on that loan if you weren't doing a temporary buy down, right? It'd be 26.13, financing $380,000 at 7.125 on a 30 fixed. Okay, a lot of people think we've been conditioned as a society to do a $20,000 price drop. For whatever reason, it's always very common request. So you go in and offer $380,000 and put 5% down on that. You're now financing $361 at the same 7.125. And you literally generated a savings here of $128.01. Okay, not bad, but there's a better way. That's all that $20,000 price drop did, is saved you about $6 per thousand. We can flip it over to a 2-1 buy down where we give the seller what they want on their $400,000 listing. Same 5% down keeps us at $380 for a loan amount. The difference is in year one, you're going to get a 2% lower rate, so 5.125 in this scenario. In year two, you're going to get a 1% lower rate at 6.125. And look what that does for your savings in year one. Over $491. In year two, over $251. Both of those greater than the $20,000 price drop. Now, the note that you sign, the mortgage instrument, is going to say that the rate's 7.125. That's the 30-year fixed rate. Okay, there's going to be an addendum to that note that it spells out this first and second year interest rate that you're getting. Okay, so it is not an arm. The lender is going to get the full payment, this full principal and interest payment right here every month. On a 2-1 buy down, it's just a matter of who's paying for it. You're going to pay $2,069.05 in year one, those first 12 payments. And then they're going to take $491 from the seller's funds to subsidize your lower payment and make it whole. So the last thing to touch base on this before I shut off my share here is, what is the cost of the 2-1 buy down? Well, it's just your payment savings over those 24 months. So 491 times 12 and 251 times 12. In this case, 8907.48 is how much money we need to ask at time of contract from the seller. And then this money goes into an escrow account. And every month that you make this smaller payment here, they're going to siphon out the 491.08 from this account. At the end of the 24 months, this account will be at zero, and you'll simply revert back to the full principal and interest payment. Yes. So again, willing to go over this with anybody one-on-one and get further in depth on explaining the benefits of the 2-1 buy down. As I stop my screen share, just understand there's going to be a point in time where we will no longer be talking about 2-1 buy downs. And that is when the sellers are in a position with demand not to have to give concessions. This whole idea will go away, and we probably won't see it again until the next downturn or weird market in 10, 15 years. So
yeah. Yep. And I've seen that even in Tempe, and I think in North Phoenix, I had my other listing where the seller concessions are becoming less common, and even less. I mean, if they're going to ask for that, to buy down their rate, they're not even coming at that full asking price or that full, what they need. They're actually coming in lower than that. So they're not getting completely. The other thing I wanted to add on that one is, let's just say that they refinance prior to their end of 2 years. What happens to that money?
Yeah, so I showed you that the cost of that was $8,900. And just for easy math, I'm going to round these numbers up. Let's say it was $9,000 and the first year payment savings was $500 a month. So at the end of it, you have to make the 6 payments, as you mentioned earlier. So let's assume that you've made your 6th payment, you're eligible for a refi, and magically rates drop to 5, right? So I call you, hey, rates are at 5, let's do a refinance. Well, you've used 6 months worth of that $500 savings. So you've used 3,000 of the 9,000. 6,000 is still in there. That allows you to pay for your closing cost on your refi and have that covered. If there's still money left over, we can then do one of two things with the leftover funds. We can pay down your principal balance on your mortgage. Okay. If you got 3,000 left over, it's only going to save you about $15 a month on your payment. Not an ideal use of that money. What we can do is take that 3,000 and permanently buy down your interest rate. So rates might be at 5%. You're excited about that. You won, but now we can buy it down to 4.75 using the seller's money, not yours. And that would be a wise time to do a permanent buy down because you're not paying for it. They are, and you're going into a loan that you're expecting to be into for long-term, probably the rest of the time you own the house.
Right. That's why it's good to have this versus our price reduction. It's not your money. You still get to keep it even despite just refinancing earlier. You're using it in a different manner. So
100%. A lot of people say, Jeff, well, if they gave me 9,000, why wouldn't I just do a permanent buy down? On this loan amount, that $9,000 would probably take you from 7.125 to maybe 6.5. So my question is always, hey, if rates go to 5 or 5.5, you're going to refi both scenarios, right? So make sure you get to use 100% every penny of the seller's money. If you do a permanent buy down, the second you refi, the only amount of that 9,000 you used is whatever that lower rate saved you and the number of payments you made. So there's going to be a lot that goes to waste.
Yep. Yep, exactly. All right, number 4. Now, this is a 3-part question, and I know you've done a video on this before too. New builds. Now, this buyer says, should I use my own lender or theirs? Is the first question. And it says they're offering incentives if I use theirs. Are they really incentives, or am I paying it on the back of my loan? And then the third part was their lender said to come back to them when I want to refinance. Am I required to use them to refinance? I've had this situation too. So
Okay.
go for it.
A lot to unpack.
Yes.
And the answer is going to be, your viewers are going to hate me for this, but it's yes and no. So my opinion is always work with an outside lender to get pre-qualified so that you're ready if you find a resale home, right? An existing home that you want instead. It also gives you peace of mind in talking with somebody like myself to know what your parameters are on a new build when you walk in. I can share with you where market rates are at. Now, what these builders are doing is a lot of incentives, which 50-50 I compete with, no lender in town can. But we just had one out in Casa Grande last month where they were only offering $4,000. Okay. Some of these builders are doing 15, 20,000. No other lender can compete with that. Their rates are going to be competitive, and you lose incentive if you go with an outside lender. In this scenario down in Casa Grande, where they were only doing 4,000, it's common for builder lenders to have closing costs that are elevated into the $13,000, $14,000, $15,000 range. Now, we're not paying for those. My answer is always going to be, who cares what they're charging? You didn't pay for it, right? Mm-hmm. But what we got to be careful is my clients down in Casa Grande, $13,000 in closing costs, and they were getting $4,000. So what's the net? They were paying $9,000. They were able to do the loan with me, lose the incentive, and my closing costs were only $8,000. So we had the same interest rates, and they ended up saving $1,000 to go with me. Now, what you want to be careful of is you want to make sure that you work with a lender that's similar to me, in the sense that I always want people to get into the house with the best terms possible. So I will give a second opinion. I look at builder docs all week long. I have clients that have pre-qualified with me, and they say, Jeff, we're buying a new build. They send over their lender's paperwork. I review it with them. Hey, I can't touch this. No lender's going to be able to touch this. Your best option is to close with the builder lender. So the answer is, those incentives, sometimes they're not incentives. We had another one a couple years ago where they were giving $5,000. That's a lot of money to most of us, right? Almost everybody. That's $5,000 is a lot. And the problem is that lender was charging a $5,000 origination fee that no lenders charge. So essentially they were zero incentives, but it felt like they would lose something if left. So that client ended up closing on their new build with me as well. And Nicole, remind me of the third question in there. Oh, on the refi.
Refinance, yes.
Refinance. You do not have to go back to them. And in fact, that's why I give free second opinions to new home purchasers that don't do their loan with me, is because you have to understand a little bit of the back end or the back side of our industry. Those builder lenders are running 30 to 50 loans at a time. It's why you typically, when you buy a house, you get horrible customer service from those lenders. They don't care. You're a number. They have 29 other people, and if you cancel with them, there's somebody backfilling it before the day's over.
Yep.
Additionally, when rates go down and we know demand is up, inventory is down, these builders are going to be busier. So your refi is going to get put on the back burner with the builder lenders. Where that, refis and purchases, that's what we do. We sit in our office all day and take care of every client that comes across our plate. So 100%, the other thing is these lenders have higher closing costs. They have lender fees. Laws do not allow you as a lender to charge different fees on different loan types. So say they have a $2,000 lender fee for underwriting and processing. They have to charge that when you buy the house. They also have to charge it when you refinance with them. As a broker, we don't have lender fees. So you just pay your title fees, your taxes, insurance, the same thing you would pay with any other lender, minus having to roll in any lender fees. So there's two benefits, right? Is going to be customer service, and then the cost of that refi to use somebody other than the builder lender at that point. Absolutely use them for the incentives if it makes sense. But I don't recommend it on the refinance.
Yeah. Okay. Yeah, I had a buyer. I went back to try to refinance, and they were just not getting back to me. It was like 45 days before they heard from them, and I'm like, yeah, that's
very common.
Yeah.
Very common. They're dealing with their next wave of loans coming in that need to close in the next 30 to 45 days.
Right. All right. Here's our last question here. Are there any first-time home buyers programs out there, and what are the requirements?
Perfect. Great question, and one I'm getting on almost every initial call with clients. So the truth is, first-time home buyer benefits have, for the most part, went away. Okay. It used to be FHA required you to be a first-time home buyer. And I think we first have to identify and define what is a first-time home buyer. In mortgage guidelines, first-time home buyer is anybody who has not owned real estate in the previous 3 years. A lot of the down payment assistance programs, like we talked about earlier, used to have requirements of you being a first-time home buyer. Most of those have gone away because the government is trying to help people afford homes and get into homes. There are some grant programs that do require you to be a first-time home buyer. Fannie Mae or a conventional loan has what's called a home ready loan that requires at least one of the borrowers to be a first-time home buyer. So there are still some requirements on those type of programs that require the first-time home buyer. The biggest benefit is one of our lending partners just came out with a program where you can get a $5,250 grant to use towards closing costs and for down payment, which is normal. It's usually one or the other. And that requires you not to be a first-time home buyer, but it requires you to be living currently where you're renting somewhere within one of the census tracts that is deemed lower income. So just know that when we take your application, we look at all of those available programs. One other benefit of being a first-time home buyer, although the programs themselves aren't really requiring it anymore, is conventional loans. And I don't want to get in the weeds here, but conventional loans have what's called risk-based pricing. Okay, kind of makes sense. If you have a 620 credit score, you're going to get a higher interest rate than if you had an 800, right? I'll use the most basic analogy. That's because of what is called risk-based pricing or loan level price adjustments that they put on these files. When you are a first-time home buyer on that conventional loan only, it does not apply to FHA or VA, they remove or reduce those loan level price adjustments to make the mortgage insurance and the interest rate better. So when we're dealing with a client who's maybe not 800 credit score that instantly signifies they should be doing a conventional loan, say we're in the 700 to 720, where that's kind of on the range where FHA probably has a better interest rate and mortgage insurance, I'm now going to look at conventional and what did it do to those price adjustments, and does it make conventional better?
Oh,
Right. So these are things that a good loan officer should be, when they take your application, they should be looking at all available programs. Because I could spend, Nicole, with you the next 5 hours on a Zoom like this, just talking about the different programs. Same thing with an individual client. I could be talking about all 30 different programs. I would rather know the 3 or 4 they qualify for, weed out the 2 we know are inferior, and then in a very quick conversation say, hey, there are these other 2 programs, but we're not looking at them because of X, Y, and Z. And we are looking at these 2 programs, and here's why. So that's what we do with every application that comes in, is we're looking at that. A lot of people ask me on that new grant program, what's the area? It's all over Maricopa County, and it is a very convoluted process to go search each address to see. So it's not a link that you can pull up and see if you currently live in one of those areas.
right, right. Okay. Well, that's all the questions, but since we're on first-time home buyers, I wanted you to introduce your little thing that you have going on once a month. So go for it.
Absolutely. So every month on the 3rd Wednesday of the month at 6:30 p.m., we do a first-time homebuyer class. I try to keep it to an hour. Last month, we went 5 minutes over, but we're trying to be respectful of your time. We know people have busy lives, so we don't ask you to come in person. It's in webinar format, so all you see is me on the screen. Makes it a little weird for me. I'm just talking at a blank screen for an hour. But we go in depth on things that we look at on the pre-qualification, reasons why you shouldn't be scared to take that first step, what we're looking for, what we do with you that is different from most loan officers that should put you at ease. And I give some examples of, putting an FHA loan side by side with conventional, or an FHA with a down payment assistance. And then I have some examples of what the cost of waiting to buy a house is, not because myself or Nicole, anybody I work with is pushy or we want you in a house tomorrow. That's just not how we work. It's more just so you can make an informed decision on what that looks like. So 6:30, February 21st, next Wednesday, will be our February one. Nicole, I will make sure you have the flyer and the link to be able to send that out with this video. And you do have to register for that. And I would be happy to have you.
Yeah, absolutely. And I've used Jeff personally. My husband and I've used Jeff personally on our mortgage and refinance, actually. And Jeff just takes the time. I think you got on a Zoom call with us and spent about an hour just explaining why this, this loan was better than this one, or refinancing, or not buying down the rate, all those different things that we had questions about. He took the time to do that and explain it and showed us why one was better than the other. And so I encourage you to go to his class. He's very informative. He lays things out like the 2-1 buy down. He'd be able to explain that a little bit more in depth for you if that works for you on the sell side. Even selling, when we negotiate, I just tell him, let's not do a price reduction. Let's try to offer a 2-1 buy down versus, let's counter that. So there's just different situations that Jeff can come into play even on the sell side as well. So yeah, I will definitely leave the link to register for that in the description of this video. In addition, I'll just remind you, if you have any questions, comment below, and we'll go ahead and address it on the next one, but obviously address them right away for you guys. But anything else you have to add, Jeff?
I don't think so. Just thanks for having me. Thanks for putting me on the hot seat. These were questions. Luckily, I was easy to answer. But guys, both Nicole and I, we come from a standpoint of wanting to help and educate, and that's why we're doing this. That's why we're doing the monthly home buyer classes. Just know, Nicole and I have talked about this a few times. We're not going to sell anybody, right? We're in the people business, helping educate, provide knowledge so that you can make an informed decision. And we would love to help you with your next home.
Yes, absolutely. All right. Thank you guys. And watch again next month. We'll have it also probably about a week before his next class, but I'll keep you guys posted on the next Q&A that we have. Thanks again. Have a great day.
Thanks.